With China, as you know, against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on.
So 145% tariffs on China. And that is basically an embargo.
They deserve it.
It'll raise prices on everything from electronics to clothing to building houses.
You don't know that. You don't know whether or not China's going to eat it.
That's mathematics.
President Trump and the White House are officially panicking as China is winning the trade war against America. It started with Trump's aggressive tariffs, now up to a staggering 145% on Chinese imports as of April 2025. But China just hit back hard. Without warning, China froze all new investments into U.S. companies. That's over $1 trillion in Chinese money, once propping up everything from Wall Street to Hollywood, now gone. And it's not just a freeze. China's redirecting its capital elsewhere, slicing away its financial ties to the U.S. one move at a time. Other global investors are following China's lead, pulling back and leaving American firms scrambling. Now the fallout is hitting home. Soaring prices, stalled projects, and rising chaos for U.S. businesses and consumers. Is this the breaking point for the U.S. economy, or can America claw its way back? Let's break down how China's latest shock move could rewrite the rules of global finance and what it means for you.
Well, you said something a couple weeks ago that struck me. You said concerning the tariffs, which economists say are going to raise prices, you said, quote, hang tough. Yeah. It won't be easy. You said that to the American people. Is that what Americans should expect, some hard times?
I've said that during my campaign.
China just pulled the plug on America. Out of nowhere, Beijing told its top economic agencies no more investing in American companies. Just like that, the flow of Chinese money into the U.S. was stopped cold. For years, Chinese money helped fuel everything from Silicon Valley startups to luxury condos in Manhattan. In 2023 alone, Chinese firms dropped nearly $7 billion into the U.S. economy. Now, that money is gone. Wall Street's in chaos. Boardrooms across America are in panic mode. Deals are collapsing. Projects have been frozen, and the markets are already starting to shake. No warning, no negotiations, just a sudden cutoff with no clear sign if that money's ever coming back. And if you think this is just posturing, think again. This is Beijing turning finance into a weapon. And for U.S. businesses already walking a tightrope, this could be the shove that sends them over the edge.
Is China coming to the table or not?
Well, which table are you talking about? If they were coming into the ring to fight and take off the gloves and fight back, yes, they're going to be doing that. China has been fairly measured so far, and Xi Jinping essentially telling his government to remain calm until now. I think they had probably taken a little bit too many punches themselves, and finally 34% that takes effect on all U.S. goods imported into China on April 10th. So mid this week, there are a number of different export controls. They've added some defense companies to their so-called blacklist, the entity list. They are banning chicken imports from some American companies, sorghum from one American companies. Also, again, those rare earths, further restrictions.
China's move to stop investments in the U.S. isn't just a rumor. It's now written into official policy. In early 2025, Beijing changed its investment rules in secret. From now on, Chinese companies, whether state-run or private, are banned from putting money into the U.S. Why? Because the U.S. has now been labeled a strategic risk. To China, investing in America isn't worth it anymore. It's unstable, hostile, and it's no longer part of the plan. What makes it even worse is that the new rules are deliberately vague. Regulators can shut down any deal for almost any reason. No explanations, no appeals, just a firm no, and the door slams shut. Inside China, firms are already being warned. Don't even bother trying to invest in the U.S. The answer will be no. It's a clear message. China's not just stepping back, it's walking away on its own terms. And for U.S. companies, that door may never open again.
China is retaliating again against the U.S. retaliation, so it's hard to tell who's retaliating in what way. But China's now saying they're at 125%, and Donald Trump saying that U.S. tariffs are on China at 145%. But the message very much from China is we are going to escalate if you're going to escalate. Whether that creates the room that Donald Trump is talking about for conversation at some point. It probably still does, because Xi Jinping and Donald Trump are both pragmatic enough to know that they probably should talk to each other if there is that opportunity. But how do you get agreement and understandings to talk in a climate like this? But certainly China sending the message again that they're not going to start to slow down in the face of Donald Trump's escalations on trade.
China isn't just freezing its cash either. Beijing is quietly pulling billions out of the U.S. and redirecting it elsewhere. Major state-backed funds like the China Investment Corporation are backing out of American private equity deals, turning instead to Europe, Asia, and the Middle East. Behind closed doors, private equity execs are saying the same thing. Chinese investors want nothing tied to U.S. assets. Even global deals are getting passed over if there's any American connection. But this goes beyond just private equity. China is also trimming its holdings of U.S. Treasury bonds. Slowly and steadily, they're reducing their exposure to American debt. It's not a total dump yet, but the signal is clear. China wants no financial entanglement with the U.S. So where's the money going? Into bonds, real estate, and strategic partnerships across Europe, Japan, and the Gulf. China is building new alliances, spreading influence, and quietly shifting financial power away from Washington. They aren't just safeguarding capital, they're completely changing the rules, and the U.S. is losing leverage by the day.
If China were to dump its treasuries in this context, it could be the straw to break the camel's back, and perhaps even push the US into full-blown default territory. This would be terrible for America, sure, but it would also be terrible for the entire global economy, China included.
But China's not the only one. Foreign investment in U.S. markets is falling fast, and the trend isn't slowing. After the latest round of tariffs, major European and Asian investors started pulling out quickly. According to Deutsche Bank, this isn't a blip. Global investors are backing away from American stocks and bonds at the fastest rate in years. Some are cashing out completely. In January alone, foreign central banks dumped $28 billion in U.S. equities. Private investors withdrew nearly $75 billion. That's not a dip. It's an exodus, and it's ongoing. Political gridlock in Washington, combined with rising trade tensions, is turning the U.S. into a risk many don't want to take. Money is moving into other currencies and other markets. U.S. companies, once flush with foreign capital, are now scrambling. The flow has reversed, and without it, businesses face higher costs, fewer financing options, and a tougher path forward. The world is watching and walking away.
Are you seeing that trend? Are you seeing a trend of quote-unquote sell America? That B of A survey says 82% are looking to reduce their U.S. allocations.
We are certainly seeing more interest outside the U.S. than we've almost ever seen before. The U.S. used to be a bastion of stability and certainty. Right now, people are questioning that. You're seeing a lot of gyrations in the marketplace built on gyrations from administrative policy changes, and that's really driving a lot of our clients to think through where they want to invest.
With foreign money rushing out the door, American companies are left stranded. The sharp drop in foreign investment, down over 12% in just the first half of 2024, means one thing: the cheap capital that once fueled U.S. business is gone for good. Now companies are getting squeezed. Loans are harder to get. Interest rates are climbing. Banks are nervous. And without foreign investors to back major deals, businesses are being forced to either scale down or stall out completely. Projects that were once full speed ahead are now on ice. Cross-border deals are down 40% last year. That's not just a slowdown, that's a collapse. And it's leaving companies scrambling to fill the gap, but the money just isn't there. Small and mid-sized businesses are taking the worst of it. Higher loan costs, canceled plans, layoffs looming. Even the big players are pulling back, cutting spending, bracing for a storm that's already begun. The World Trade Organization says it plainly: this wave of uncertainty is dragging growth to a crawl, and as cash dries up, the pressure mounts. For American companies, this isn't just a rough patch. It's the start of a brutal new chapter, where the costs keep rising and the lifelines are disappearing fast.
It doesn't really give enough time for small businesses to make the adjustments we need. Ultimately, China is not the only place to make glass bottles or to buy glass bottles. But I don't have the widespread capabilities in the supply chain to immediately move my procurement of those products to a different place. Big businesses might have that. Big businesses have the resources and access to capital to wait it out, to wait for American manufacturing to come back. But a small business like mine will be out of business before the end of the year if things continue on this path.
So what about bringing jobs and factories back to America? That was the plan. Hit China with tariffs, bring manufacturing home, rebuild the supply chain. But here's the truth, it's not working. Turns out, about half of everything the U.S. imports isn't just finished products. It's parts and materials American businesses need to keep things running. So when tariffs go up, so do the prices of the things companies rely on. And there's no quick fix for this. You can't just snap your fingers and replace a global supply chain overnight. Now, reshoring projects, factories, equipment, new plants, they're stalling, or worse, getting canceled. The foreign investment that was supposed to help make it happen is gone. And the money from Washington isn't filling the gap fast enough. Companies are cutting back. Some are walking away entirely. Even with tax breaks and government incentives, the numbers just don't add up. Instead of a manufacturing boom, we're seeing delays, layoffs, and missed deadlines. Industry leaders are warning, if things don't turn around soon, entire sectors could collapse under the weight of rising costs and broken supply chains. Trump's dream of bringing it all home, it's starting to look like a smokescreen.
Today, reality bites Donald Trump in the you-know-where. If the price of eggs propelled Donald Trump to victory in November, then his man-made economic instability, which has rattled markets and ushered in unease for American consumers, may very well be his political undoing. A wave of new polls show that both Donald Trump's approval ratings and voters' opinions of his handling of the economy are today in free fall. The New York Times average of polls shows this, quote, Trump's approval rating has sunk to about 45%. That's down from 52% 1 week after he took office.
And now it's hitting where it hurts most, your wallet. The tariffs aren't just headlines, they're jacking up prices on the stuff you buy every day. Electronics, clothing, appliances, even groceries, all of it is now more expensive. Why? Because the parts and materials companies need are getting pricier, so they pass the cost straight to you. Factory-level inflation is exploding, the highest it's been in nearly 3 years. And retailers are warning, it's only going to get worse. Companies that used to rely on cheap imports are scrambling to find alternatives. But the new suppliers are either more expensive or don't have enough inventory. That means empty shelves and higher prices. And it's not just imported goods. Half of U.S. imports are parts used in American-made products. So even the products stamped Made in the USA, that's going up too. Families already drowning in rent, gas, and medical bills are now getting slammed at the checkout line. Budgets are stretched to the edge, and for many, they're already snapping. The era of cheap goods is over. And for millions of Americans, the struggle is just beginning.
This morning, some Americans are playing a game of chicken with prices.
If you got an Amazon order waiting in your cart, just go ahead and buy it.
Wait too long, those shoes you've been eyeing could get 18% more expensive. And that sweater you had in your cart, 17% pricier. And with 104% tariffs hitting China overnight, smartphone prices could also soar, with one estimate predicting an iPhone 16 Pro Max, already $1,200, could jump by another $350.
The mood across America's economy right now is panic and confusion. Markets are stumbling, growth is stalling, CEOs are cutting forecasts, investors are pulling back. The U.S. is on track for the sharpest slowdown among major economies in 2025, and the brakes are barely even on. Tariffs are choking supply chains, lending is drying up, and confidence is collapsing. With policy shifting without warning, no one's willing to bet on anything. Consumers are pulling back and businesses are slashing spending. Meanwhile, inflation is creeping higher. The IMF says it's headed for 3%, driven by trade wars and supply shocks. Prices on food, clothes, essentials, everything's creeping up. And it's the middle and lower income households that are being crushed first. Inside boardrooms, the fear has a name: stagflation, a toxic mix of rising prices and zero growth. It's the worst of both worlds, and it's getting closer. Wall Street's nervous, Main Street's hurting, and the Trump administration is still pretending everything's fine. The old sense of economic stability is gone. What's left is a slow slide into something far more dangerous.
It turns out, in Trump's economy, the only safe job is guy who takes photos of panic stockbrokers. And in the last few days, we got some classics. We got Johnny Head and Hands, an old-fashioned God Has Forsaken Us, and this guy who will be the new face of the $100 bill.
And while America's economy stumbles, its closest allies are quietly slipping away. Germany, France, Saudi Arabia, countries that once leaned on the U.S. are now doing bigger deals with China, and they're not looking back. The chaos in Washington, the whiplash trade policies, the looming recession. It's made the U.S. look unstable, too risky, too unpredictable. So now, allies are hedging their bets. Europe is locking in new trade deals with Beijing for tech, energy, infrastructure. Saudi Arabia and the Gulf states are selling oil in yuan and euros, moving away from the dollar, one deal at a time. It's not just business, it's strategy. They're building new ties, shifting reserves, diversifying currencies. And with every step, the U.S. becomes less central in the global economy. At the same time, foreign demand for American assets is sinking. Bonds, stocks, real estate. Investors are cashing out, not buying in. The world's biggest players are watching the U.S. struggle, and they're already making plans for what comes next. America's grip on global trade is slipping, and the rest of the world isn't waiting.
Also, President Trump is warning countries against cheating to get around his tariffs. But China may be taking steps to interfere with trade talks between the U.S. and other nations. What is going on? Grady Trimble of Fox Business live at the White House. Hey, Grady.
Hey, good morning, Dana. China says that if the U.S. makes any deals at the expense of China, then it's going to, quote, take countermeasures in a reciprocal manner. And some experts are warning that Beijing could try to strike deals with European countries, for example, that are too good for those countries to refuse at the expense of the United States. But President Trump doesn't seem deterred from his plan, posting on Truth Social about the countries trying to reach agreements with his administration, saying, "It's good to see that the world knows we are serious because we are. They must right the wrongs of decades of abuse, but it won't be easy for them. But for those who want the easiest path, come to America and build in America."
China's freeze on U.S. money is just the first move in a much larger play to rewrite the rules of global finance and push the U.S. out of the center of it. While America scrambles to patch up trade wars and calm investors, China is building a new system, one that doesn't revolve around Washington or the dollar. The U.S. dollar, once the ultimate safe haven, is now 2025's worst performing major currency. Global investors are pulling out. Even longtime allies are shifting reserves, cutting deals in other currencies, and turning to Beijing for stability. The World Trade Organization is sounding the alarm. Supply chains are breaking, exports are dropping, and uncertainty is killing growth. North American exports could crash by over 12% if this keeps going, and that's exactly the point. China's not just reacting, it's reshaping the game, moving the money, making the rules, building alliances that don't need the U.S. at the table. This is more than a trade war, it's a power shift, and America is no longer in control.
After Black Friday comes Panic Monday. Today, stock markets around the world continued in a downward spiral as the ripple effect of Donald Trump's sweeping tariff announcements triggers fears of a global recession.
With China, as you know, against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on.
But the U.S. president remains unfazed by the havoc he's wreaked. Sometimes you have to take medicine to fix something, he says. It's quite unclear what exactly he's so eager to fix, but to many around the globe, his medicine feels like too bitter a pill to swallow.
What's your take? Did China just outsmart the U.S.? Or was America too arrogant to see this coming? Is Trump sabotaging the economy? Has the American empire already started to collapse? Drop your thoughts in the comments below. And don't forget to like, share, and subscribe so you never miss brand new content. And if you're ready for more, be sure to click the next video on your screen.